Good morning, good peoples. Let's jump in here. I've been working hard on this one. There's a lot to it. Um, how to hedge MSTY. Now, this applies to most income funds, right? It's not a unique, it's just who you utilize. The strategy could be used for a different um, security. So let's talk about this. How to hedge MSTY. There's a lot of fear out there. Personally, I could see this thing easily going to 168, 173, maybe 180 in a good upside and do that in the next 4 or 5 months. I don't see it going down below, say, 74, 73 in this period of time without going higher. So just my personal technical analysis, okay? But let's assume for a minute that it does, and it runs to say 175, and it's October, November, December, and everybody's rah, rah, rah. That's when it sucks in a lot more people, and the 250 and the $1 million price tag on BTC and all that starts to come into play, and MSTR to 500. Well, 500 wouldn't be MSTY to 100, right? So euphoria begets euphoria, FOMO, right? So let's talk about, though, what happens if we reach the targets that I think are very possible. Okay. What kind of pullback will we likely get? Well, how stretched would we be from a 200-day moving average, be it in MSTY, but really in MSTR, because MSTY does not go one for one. We all know that, right? And I'm going to talk extensively and show you examples in here. So having said that, it's very possible. Go back and look at 2013, 14, look at 2022, and you see that 75 and 80% retracements aren't uncommon. When you listen to Michael Saylor and he talks about we could average 65% over the next 10 years. Well, what he's really saying is we've averaged 65% over the last X number of years. Will they average that over the future? I don't know. It's hard enough for me to just come up with a number using Fibonacci extension levels to come up with my 175 target. Time frame, probably November, but it could go different months, probably this year. All right, so what do you do then? So all the scaredy cats, right? And you're legitimately a lot of reasons to be scared. Never ever put all of your funds in something, right? I think I mentioned even when I was collecting 40,000 a month and doing all that money in MSTY and Coney and they were running, I had other wealth and other much safer assets so I could sleep at night. But it was a nice high while it lasted, right? But that 45 back to 20, now luckily I was in MSTY at 20, right? 21. But it's never fun to see it go to 45 and then go back to 20. And I know people will load up again. But one of these times is, where's it going to be if we go to 175? It may not even go to 45, right? It may only go to 35. But all right, let's get into this about how. So there are many ways to accomplish this with varying costs and levels of knowledge to accomplish it. People, I think mistakenly, always think an inverse income ETF fund is the way to go. In my humble opinion, it can be, but it depends. And I'm not talking about diapers, right? The depends has to do with how these funds actually work. Well, let me show you, right? The proof's in the pudding. All right, where did I fix my typo? Okay. First, they are income focused, first and foremost, and can move closely with the under Bruce, you type so underlying, and also only move, say, a third at times. All right, we all know what the underlying of MSTY is. If you don't, hello. It's now called strategy and not MicroStrategy, but the symbol's still the same for now, MSTR. And who's the chairman? Somebody properly corrected me and said he's not the CEO. Yeah, he's much higher than that. He's chairman of the board and co-founder of the company. So there's somebody that 98% of the people don't even know who's the president. I'm sure he's a really smart guy. Michael Saylor wouldn't have him in there. But Michael Saylor is the face. There's no question. Really, the face of BTC, and clearly MSTR are now strategy. Okay. So it could move 1/3 to the underlying and outsized or quick, big directional moves. So let's go explore winter a little bit. Let's go take a look at that. All right, so I got different tabs, and then I'll talk about some other strategies and take you through those. So what does winter do? Well, we all know it's an inverse, quote, it's an inverse fund. Well, what does that mean today in the YieldMax world? Well, I just posted in clip some of the things that I track and store and utilize. And these are the interdays over a period of multiple days on winter. So winter utilizes MicroStrategy, does it, and when it does synthetics and then spreads and calls, how does it do it if the people that do bullish bets on a synthetic? Well, what's a bullish bet? If I'm in MSTY, what's MSTY doing? Well, MSTY is buying a call and selling a put. Same strike price, same expiration. Okay. And sometimes they're close when the synthetic is put on a level that's very close to the current price, then there can be a little bit of difference with the IV and volatility. And sometimes, look at, and then, so they do just the opposite. Instead of buying a call and selling a put, they buy the put and sell the call. So it's just inverse. They're betting it's going to go down and not betting it's going to go up. And then they do similar on their weeklies. Okay. So without getting into all that, you know what it is. But what that does, because I know it so well, it's the same on MSTY and MSTR, that let's take a look at winter. So I worked a lot on this, guys. There's a lot here. So I tried to be as explanative. Whoops. It jumps into my OBS screen. I don't need that. All right. So we only have a certain amount of history, right? So I can only work with what that history is. So that history for winter, luckily, we've got some time. We got 66 days if you take from today to when it launched, right? Sunday, June 1st, back, that's 66 days owned. Okay. It launched at $50.06. But more importantly, how did it do every single day to some other things that you would care about? So you have winter here. We'll get into these in a minute. I added these as an afterthought for a different reason. And you have MSTY and you have MSTR. So what we want to determine, is it a barometer or thermometer of what we want it to be? So I came over here and said, well, we want to look at down days, right? It's supposed to be insurance. It's supposed to protect us. So I said, let me find days that were, just by scanning the data, 7% or greater. And I put a purple out here on the side. Now, the only other thing out to this side is when there was a distribution paid, because sometimes that makes the data look crazy, like, oh, well, MSTR didn't go down much. Why did MSTY go down a lot? Well, it just paid out $3 or $2 or something, right? So those need to be noted. Doesn't really change anything. But we want to see On the day where insurance is supposed to be insurance, how's it doing? And just as I said to you, sometimes it does a great job and sometimes it does a mediocre job. So look at this one. So I come out here and I give you the percentage. So here's a 7.5% decline. All right. So the idea is you go by winter to protect all your MSTY stuff. Okay. Now you're going to get a little bit of income, which I do factor in at the bottom on this, the income. But in some fairness to winter, they waited a long time and they made one payment. But normally, based on the time when they've been running, you would have had two payments. So I'm going to show you a number where the one payment's there, and I'm going to show you the number where I think two should be, but it wouldn't be double the one, if you follow my logic. All right. So here's a case where MSTR went down 7.5%. MSTY went down 6.76. Very common, 90, 95%, something like that, because it's getting, in theory, a little bit of income. So it doesn't go one for one. But I'm telling you, if MSTR crashed 90%, you're going to go down 85%. It's going to be ugly, ugly. All right. So what? Let's follow Winter over. Ignore these guys for right now. I'm coming back to them. Oh, well, why didn't Winter go up 6.76 or 7.5? So my insurance, it's working a little bit. If it had gone down, I'd really be worried, right? But it's not fully working. Something I've noticed in here, if you have a couple of down days, it tends to do a little bit better as it builds. But needless to say, so I put a percentage out here. This is probably one of the lower ones. It gets much better in other ones. So it's a mixed bag, but in general, it ends up being very good, I think, when I show you all the other alternatives. Unfortunately, in this security, if we're dealing with other securities, some of these strategies that I'm going to attempt to show you probably work better. But with the crazy premiums on MSTR, those strategies don't work very well. And I'll show you what I mean by don't work very well. So 38.8%, they captured in the down move that they would have if they did 100%. So 100% would be a 7.5% raise. So just divide 2.91 by, that number, right? And that's how you get your percentage. So moving along, I'm going to come back to the T-Rex and the Defiance double bear funds. Okay, for right now, they're not in the discussion. Here's a payout. And now we're going to get a lot more purple data, just so happens, okay? So here's a 94.3% capture, but it's inverse, right? So this is when, and I need to show a couple of these, this is when MSTR takes off. And same thing here on MSTY. Sometimes it's a third, sometimes it's a half, sometimes it's three quarters, sometimes it's 99%. Well, this is about 75% capture for MSTY on the upside. How did Winter do on the downside, right? That's what you expect it to be an inverse. So MSTR is flying. Well, it went down 94.3% of what you would expect. So when MSTY flies, Winter crashes, right? That's the common theme here. All right, let's continue. The next purple one. And we got an 8.2. Mostly I picked down ones, but I needed to show you an example of an up one. Okay. Just so this makes sense. So there's an 8.2% down move. Okay. We had a 13 down. Why? Because there was a MSTY payout. Okay. Declaration and ex dividend. Okay. So that you get those anomalies. Normally you don't see that. You don't see an outsized down move here. Drop from 2101 to 1827. All right. On its 270 or whatever, or even this distro. And then you have a down day on top of that. So it makes it outsized. All right. What did this guy do? Well, he captured 83.1. This is the yield over here. So don't on the payout. but this is just a percentage related. Okay, what did winter do? These guys are going down. You ideally want winter to go up 8.26. It didn't. It went up almost 7%, so it captured 83.1. All right, let's move along. Here is an 11% down day. Look at these back to back. You got an 8.67 down day and 11 point. Look at this. This is 3/4, 85, 80 to 85%, right? So MSTY is doing what you would expect it to do, go down and go down substantially. But I don't even show you that percentage because I'm trying to focus on winter because we're talking about winter as a prelude to being insurance, protection, and a hedge. All right. So moving over on the first one, we got a 6.63. That's not so good. That's a 58.9. But you're seeing why I say that it can be 1/3, it can be 90, 95%. Rarely is it just a full 100%. Sometimes it's, high 30s. I don't think I've ever seen one that it doesn't do, say, 35%, 33%. And then you got your 40s and 50s and 60s and 70s, right? So you got a 58.9. What did it do on this other day? 8.67, 6.74. So I hope we can get up to 6.74 or we can go up 8.67. Well, we just about did. We just about matched MSTY's down, but we didn't match, which is what you'd expect to happen to these income funds, but we didn't match MSTR, okay? But that's good for 77.4. You with me? All right, good people. So here's another one. You're going to like this one. So this one's a 9.65% day where MSTR went down. We went down 8.5. No surprise there. And what did we do on the upside? We beat what MSTY went down, and we got dang close to 9.65. We got 8.8, 80%, which is 91.2. That's about as good as you're going to get. We got one more in here in this 60 something day. Remember, with weekends, it's 66 calendar days since it launched, so it's probably 40 something trading days. I didn't add them. Okay, so 10.84, 9.79, and we're up 6.11. It beats a sharp stick in the eye. It's still up. Okay, so there's some protection, 56.4. I didn't go through and try and average them all, but I think you get a gut feel. Okay, so the other thing that we get and you get if you own winter is some income. Well, what about NAV erosion? How do you look overall? And again, this is so many trading days. I have to take that and multiply by a factor if I want to annualize it. So we got one distribution, okay, less distro. We got paid $2.72. But normally, MSTY got paid in here twice. Why did this one only get paid once? It could have paid in April, but it held out and waited and paid in May. So is that because they wanted to have a really good payout? They would have probably only paid $1.40 on the first one and maybe $1.70 on the next one. So you can muck around with that. But I went through and said, okay, the fund lost, okay, because let's start with MSTR over this calendar period, 27th of March to 5/30, the last trading day. MSTR, which doesn't have dividends, went up 13.7%. Okay, which it moved 44 points. It went from 324.59 up to 369.06. So pretty good. It's not the greatest in the world, but it works. So what did MSTY do? Now remember, MSTY has to recover from paying out dividends and so forth. It has that disadvantage. And it never, so MSTY is down 4.5%. Not bad. Started at 22.58 and what is it, 21.55? I'm not going to scroll up there. I'm pretty sure that's what it is. So it lost $1.03, which is 4.56. But guess what? It had two payments, right? Over the little more than 2 months, 2 months and 3 days, which is normal. And so that took the $1.03 loss and made it a $2.68 gain. So you didn't really lose anything on your NAV. And so then what is that as a percentage gain overall? Well, that's a 12%, right? You base it on 2258. So we went from a negative to a positive. Over here, because it went down $10, you expect that. Now, what you want and why you have insurance is if MSTR went down 20 or 30% over here and, MSTY made money, then you want winner to not go down. So you're willing to have winter go down some. You just have to understand what that insurance and that protection really cost you. Okay. So at 741, that's what your real dollar loss on $50. That's like 14.8. Okay. So you lost 14.8%, but you gained 12% over here on MSTY. And so, you're not ahead, but you sleep better knowing it. But remember, if MSTR flies either way, if it just drops like crazy, winner is going to capture a third, a half, 60%. If it just peacefully every so often goes down, you can collect more. It's not the dividends that end up mattering, although they do help. So I wanted to show you this and not just tell you, well, this is what I think. Okay. This is actual data, guys. It's all we've got. And I could go out on crash and Tesla and fiat and, dips and NVIDIA, but this is what we got. So let's go back. I'll come back to this when it fits my agenda on the first page for those other ones. So, is an income fund help? Yeah, it helps. Is it, the perfect solution and pays you too? You get all this big double income and make money everywhere? No, not really. But is it a form of insurance? Now, this one surprised me. I Googled this like crazy. I went and looked everywhere. I would have sworn I saw some 1X ETFs that don't really pay anything. If some of these, like, I'll show you something else I did, but I wasn't able to come up with one. If you guys find one, hit me up. Okay. I'm all ears, I'm all eyes if you've got one. But are there 2x leverages? Now they say 1.5 in some of the literature, and some of the literature they say 2x for Defiance's SMST. Okay. And the T-Rex family, there's MSTZ, and it says everywhere 200. This behaves exactly like the 200. So maybe it's one of those where it's 150 to 200 range, like MST is on the upside, and by adjusting the swaps, they get it up or down. Okay. But here's something I want to say to you. So I'm saying, hey, maybe we can hedge it by owning, forget the income side of it. Maybe we just buy a inverse ETF. Well, I really would like to see a 1X, but right now I don't see a 1X. So I really love to find one and do it, but I wasn't able to. So let's go explore the 2X. But here's something to tell you before we do it. These are more short-term methods of protection. Most all inverse and especially leveraged ones utilize swaps. So I do not recommend just saying, hey, this is my 3-year insurance plan. So when we start crashing like crazy, I think sometimes you have time to put on some of your insurance. You might lose the first 20% down wave, but then go out and buy the 2X. And as long as that MSTR and MSTY are going down, you hold it. But in general, it's almost swing trading. I'm 3 weeks in this, I'm 3 weeks in that. You'll see the numbers here. All right. So then we'll talk about just pure options, which honestly, guys, I'm going to have to rule out. But I want you to see all the work I did to show you screens and do all that. And by the way, let's do this. This one's pretty. Okay. So I got updated. It's still 3 or 4 days old because since I do detail on Pulte, they're like 516 million now. But it's close enough. It's within 3 or 4 days. So I went and got all these statistics. I had to do a lot of work to convert them. They'll say 4.3 billion. Well, good luck with trying to divide 4.3 B. You really got to just convert all these to, and then some say million, and that doesn't work. I wanted you to see the percentage down the line, and I wanted to build something for you over here to prove math and statistics work. You know, I'm always talking about that probabilities and bring up math, and anybody who doesn't understand, options are math on steroids, right? Statistics. So let's take a look. We all know, Misty, I was telling you 32.4 and 32.5. Look at it 3 days ago, guys. It's 34.43% of all money invested into yield max. You just divide this number by this number, right? And then NVIDIA is 11.61. These are their assets under management. You see the big digits are billions and then they start millions. Pulte is moving up, but it's got a ways to go before it passes YMAX. But I don't know if it'll pass it, but it's going to make a move, that's for sure. And look at the length of time. Every one of these funds are 12, 13, 15 months. SMCY might be closer. Pulte's 8 months. All right. And you see some of them down here. Some surprise me, some don't surprise me, right? This one, you guys know how I feel about the miners. I'm almost guarantee a year and a half from now that this sets much higher up here because it'll start performing. Today it's paltry. The amount of money that on the IV and everything they can generate, even if the fund wins, is just too small. It doesn't rank for people who chase yield, and yield max is about yield for the most part. But the smart people buy the ones that hang on and have less nav erosion, et cetera, et cetera. So let's look at this. So I color coded the first three guys and said, what are the top three make up percentage wise? 55.8. There's 49 funds here, guys. Okay. So let's add one more. What does the top four make up? 65.25. What do the top five make up? 71. What are the top six? Now we've added Pulte. All right. I know you Ulti lovers. This proves it. A lot of people that are in Ulti. So the top seven make up 78.31. Well, I want to get it up to 80 and see if the 80-20 rule holds. Well, I added YMAG in there, 2.61. We're now with the top 8 funds, okay? Now, I'll give you a little rule, 8 of 49. It's not exactly 20, and I'll tell you why I don't think it's 20, or it would be, because the 80-20 rules at play. So 8, right, 20% of the funds, in this case 16.3% of the total funds make up over 80% of the assets under management. So the only reason it's 16.3 is when you come down here, these newbies haven't had a chance to even accumulate anything. Now, I know Hoy has some money assets under management, but look at Rennie and R. Diddy and Q. Diddy and P. Diddy, and that was a joke, guys. And so, not a lot. So those have over time will expand. It'd be great if all 49 were 1 year in existence. Then you would probably see it right at 80-20. I just find it. I love math, and I find statistics kind of wild at times. It all converts back to the mean at times. All right, let's go back to our sheet, and let's talk about the only other category that. Well, there's two. Let's talk about these bear funds, right? There's bull, 2x bulls and 1x bulls, but if you want a 1x, I could not find a 1x bear. But I found the 2xers, okay? Defiance, they just get destroyed. on their NAV. But they look pretty good here against T-Rex. So let's go take a look at that. So I went back and added them. Originally, I just had what I talked about. And I said, all right, well, I'm not going to pull every single day. It's just not necessary to pull all that data. I know when the down days are, so I just plug in their data and see how they did. Well, guys, they did exactly as you would expect. They exactly all the time acted like a 2x bear. They were down twice what MSTR was. So if you want it from that perspective, because they're not paying you any income, they don't confuse things with income. I'm not saying that they won't ever have a little tiny payout or something. Some of these funds. So here we go, minus 7.5, minus 6.76. We went up to 291. What do these guys go up? Double. What are they going to do on an up day in MSTR and MSTY? They're going to go down. Right? So you talk about NAV erosion. These things will erode like crazy if this takes off. That's why I would have preferred this. I'd love this to be a 7.5 up on both of them and a 1x. All right. So that's what I got. They're both up 1535 and 1530. I call that a tie. All right. Going down here. Here we go. Up 7.95. So you'd expect almost 16, right? You'd expect like 1590. Well, they're darn close. 1570 and 1584. They're spot on the money on doing what they're advertised to do. How about this? -8. Okay, this was when they paid out, so that doesn't matter. 826, you'd think they would be 1652. Well, they're 14 and 13. They slipped a little bit that day, but not far. Not a third, guys. 11. Can we get a 22? Oh, yeah. That's 2248. They beat it. Or sorry, 2252. They beat it. 2268. This one fell under. If you average these together, you're probably right at 2252. 8.67. What does that measure to? 1734. Okay, 1667, 1690. I'll take it. 965. Okay, that's a 1930. Look at that. 1988, 1910. These guys are doing the job. Okay. 1084. That's what? 2168. Okay, 2081. 2115. I'll take that all day, every day. All right. So from that alone, these 2x that are reset daily are going to give you money when MSTR is going down. The question becomes, can you afford the insurance along the way when MSTY and MSTR are going up? And that's what we have to continue to look at. So I've already told you here, these guys have some income. So in this 2 months and 3 days, they lost 14.8% of your money. You bought something for $50, it's down $14.80. Percent wise, right? $7.41. Well, this guy, you can't go by the number alone. She, MSTZ, is down 6.3. But look at that crazy percentage, 54.93. You know what it is up here on the top? $5, 5.11, right? So you bought something at 11.49 and it's now 519. So you lost big time. You got no income, right? So makes, to me, winter look better. Not perfect, but it makes it look better. What did we do over here in defiances? See, that's why the number doesn't make 55. So close. Right? So it dropped, it went from 67.2 to 29.89. Now, I don't think that one's paying. Did I miss something? No. If I missed something, guys, there's so much, data to comb through, but I don't think they're paying anything. I know one other comparison I'm going to show you pays a tiny little 3 or 4 or 5 cents a month. I didn't even bother to add it. All right. So these are methods to hedge. Not perfect, but at least explained. All right. So let's go back to our first sheet and continue on our path. Even if you're very skilled in options, I am, some of you are, the premiums are so large based on the high IV that it's too expensive to buy leap puts on MSTR. What's a leap for the few of you that don't know? Out over a year. So right now, if I go buy something in January of 2026, it's only 5.5 months or something, but it's considered, or no, it's 7 months, right? Because we've got June, yeah. So it's 7 point something. So somewhere I made a note of 5. In where I'm talking about options on my screen here. But a leap means you leap into the next calendar year. So then somebody goes, oh, a 2-year leap. So a 2-year leap would be out to 2027, a 1-year leap. And so it'd be various months. All right. So here's the problem. The premiums are so high, the risk reward makes absolutely no sense. So to give you an idea, you go out and you buy a put on MSTR out into 2026. The amount of money that you spend, so I'm going to make up a number, say you bought $10 a put, okay? MSTR would have to go down 80%. 80%. You'd have to have it go down 80%. Do you know how much you'd make on your $10? A 1x. You'd make $20. You'd make $20, a $10 profit. So you'd make 100%. You doubled your money, right? You went from 10 to 20. But my gosh, do you know how easy it would be for it to not go down at all and then just lose your $10? Which is okay because you just bought it as insurance. It's like your house didn't catch on fire. But the idea is you want to really win, because if MSTR goes down 80%, if it goes down 50%, you're going to barely make any money. So that's how bad this thing is stacked against you. That's why winter ends up being possibly a winner, right? Winter becomes a winner. All right. So bear call spreads might be the only way to utilize options, and even that requires you to rewrite them, Austin, for the best effect. So I'm going to walk you through some option situations. And then you can consider a bear put spread. But spreads limit your upside and they limit your risk. So they're not going to help you in a big way if MSTR crashes. It's just not going to happen. All right. So what I did decipher, or thought that I would try this, and then I went through and I pulled up my Ameritrade, Thinkorswim, and I went through and I looked at the current options on MSTY. And because MSTY is such a big popular fund, at least they have some liquidity. Some of these funds don't even have options because there's not enough people trying to buy them, right? So at least there is on MSTY, but they can be thin at certain strike price in certain months, and therefore there's a big gap in the bid and the ask, and you just have to play around to get your order executed. All right, guys. So, and I can explain that more, but I think right now you don't need to know that. You just need me to walk you through. And then lastly, I was highly optimistic on this, but my experiment failed. I said, okay, since there's no ETFs that I can find on MSTR that are 1x inverse, they're 2x inverse. What about just going out and shorting BTC through some of the inverse ETFs? I know they exist. BIDI and SM something. I have them written down. Those are a 1x and a 2x short on BTC. And then I compared them I built a whole new spreadsheet with MSTY and Winner and MSTR and put them in there. I didn't want to keep and put it under another tab. So let's take a look at that, guys. So this is a different one, but it's got all the same data. So I put Biddy in here and I played around with SMTX, whatever. It's ProShares 2X. You know what? It didn't really do much. It didn't change much. So I put some data in. I said, the heck with it. I'm not even going this route, right? And even this didn't work, you know. Now my rationale, my logic is the worth of Michael Saylor and strategy is in all of its ownership of Bitcoin. Sure, they're trying to build some software to do things in a crypto marketplace, and eventually they'll have some stuff together, but it's minuscule, guys. It's minuscule in terms of a big giant software company. But all their Bitcoins and all that strategy and all that effort that he's putting in, you know, with a limited Bitcoin set, right? There are only 21 million coins. If that all bears out, then he's already made his money and he'll continue to make his money. It's just that there will be sharp retracements. Nobody wants to go through a third or a quarter of their money, you know, trying to retire, trying to live on this kind of an income, and you can expect volatility, but then all of a sudden going through an 80% drawdown in probably 3 months is all it would take, 2 or 3 months. That will just chew you up and spit you out. And I don't think most people will be able to handle it. So that's why I'm talking to you. I do the videos. I own MSTY, okay? But I also understand the risk. I personally never use margin. I use margin like crazy when I was doing precious metals to build my retirement from 2001 to 2011. And I used that, the more cash I could have, the more. And I also generated cash by selling puts. All of my favorite big mining stocks that had options, I constantly sold puts. Every time the stock was down low, I sold puts out 3, 4, 5, 6 months, captured the premium. And, 95% of the time I used all that premium to buy more shares of other mining stocks. And it all works in a rising boat. You just have to be very particular about your timing and study it. All right, guys. So on this scenario, here's that same, I don't have the color, the same 7.5% drawdown. Okay. So what we want is a 1x bear. We want to see it jump up 7.5%. Winner jumped up 2.91. So it started out pretty good. I'm like, okay, this is up 4.55, right? I didn't even throw MSTY. Oh, yeah, I did. MSTY's over here. All right. So MSTY went down to 6.76. Whoops. And that went down to 7. And we wanted, this is that one that only captured 38%. Well, this captured better than that, right? It probably captured 55, maybe 60%. And then what happens, guys, if you ever notice, when I do one of these, I have to put the lower number underneath the one I'm doing, because if I don't put it in, then I can't see the percentage increase over here, because it says, okay, how much did it go up from this day to this day? And then factor it in against the price. All right. So here's a down day. But again, this is MSTR and this is BTC, not MSTR. MSTY's using an underlying of MSTR and Winner's using an underlying of MSTR, right? And this isn't. This is using BTC, which I figured would correlate pretty darn good. This went down 3.41%. This went down 2.95. MSTY went down 2.48, and Winner went up to a couple of these, and I no longer like it. Okay, here's a 4.73 down, only a 0.52 up. Look at Winner. So why wouldn't I want to get income and have somebody that performs better? So I did a few more. Here's an 11% down move. Here's a 1.86% up move. How about winter? 6.63. Then the day before, I had an 8.67. Okay, down move. Okay, I got 7, but I just about got that in winter too. I wanted to see it where it's the only one up there. Winter's doing really bad and it's kicking butt. So here's a 9-day down, 9.65 in MSTR. It went up 55%. It's in the right track, but look at this winner. Y'all kicked booty. 8.8, 90%er. So here's a 10, almost 11% down day, up 4%. So you got 35, 38%. This is 60%, 58% probably. So guys, I'm a little disappointed. That's why I didn't keep going with the 2X. I wasn't getting what I wanted. So what happened here, this thing started at 24.91 and went to 20.28. So it went down 4.63 points, but it went down 18%, and it's not paying. Or even if it pays, it's like 4 cents a month. That's not going to cut it, right? What's that going to take it down to 18% only? So I'd rather be over here based on that. I mean, again, the sample size is what we have. So you know what I know right now. Let's wrap it up. And the only way to wrap it up is to show you that you try and buy the puts and the calls and your strategy on MSTY itself. SBIT, I guess, is the name of the 2X. But it didn't change anything, guys. It really didn't. So Biddy's a 1Xer. So maybe that had to do. It's only a 1Xer, right? And not a 2. But when I did the 2, I didn't really notice much difference. I didn't see the full impact because they're not always correlating. And maybe people are going, duh, Bruce, they're different entities. Yeah, I know, but they're supposed to be very similar. MSTR is usually leveraged and does a little better than BTC. All right, so let's finish this. Where do I have that? I know where I have the sheet, but did I not talk about it here? All right, I just take you right to it, guys. Here's MSTY option. Yeah, I just talk about it over here. So one of the thoughts is MSTY isn't, hopefully, has that super high price. Well, guys, after I looked at it, it does. Sad to say, it does. So I went over here thinking, okay, and I went to Thinkorswim and popped in appropriate options with the right kind of numbers. So this is as far as they go. If you go to MSTR, you probably can buy all the way through 2026. I didn't do it, but didn't matter just because it's so much more heavily traded. So you got MSTY here with options, but they only go to January of 26. So I want to do the 7 months, or actually 7.5 months. I put 5.5 and it's not, it's 7.5. After I looked at that, I realized. All right. So let me walk you through some logic that you can do here. I mean, number one, you can just go out and buy puts and then you can put different packages together. So it's $21, right? Here's the puts are on the right and the calls are on the left. So right now, a 21 put, okay, with us trading at 21.55, okay, so we're down a little. Like if the higher you go in your put price, the higher you have to pay. So we go to 21, we're already 55 cents above that. That spread is $66.50 by 880. Okay, what's the significance of a spread? Well, the spread means if you want to get executed, you could put an order in to test it half. So do the math. It's $2.30 difference. Okay. So take $1.65, okay, and try that. Add that to the 650. So I talk about that. So you try and buy this put for $7.65. Okay. So let's walk through what you need to happen in order for it to be good insurance or make money. And it's not pretty, guys. Not pretty. What I said for MSTR when I looked at it a while ago about having to have a drop of 80% to double your money, it's just about what you have to have here. I'm going to walk you through these numbers. Okay. So just to break even, you paid seven. And look, somebody's going to say, but Bruce, just leave it out there for a day or 2 days and keep, yeah, and you might get lucky. But not everybody has time for all of that. Okay. I've done that. I know options backwards and forwards, and I know getting good prices and not getting good prices. And it's a game. Okay. And especially when they're more thinly traded than some big giant one if it's got a 5 cent spread, it doesn't matter. But when it's got a big spread, you can play around. So I never, I'll go out there and try. And what did I say? I needed 765. You can go out there and try and buy it for 7, but I guarantee it's going to set for a while. And then you're going to find out if they'd even think about it. If it sets for an hour or something, probably not going to take it at all. Then you want to start up in it, 725, 745, 765. They may not do it at 765, right? Just depends.